Hi, it's Michael Farr at Farr, Miller & Washington. Thanks for joining me again this week. I'm looking at headlines and I'm looking at numbers, as I always do. I'm watching what's happening on Capitol Hill. I'm watching what's happening and what isn't happening with the Federal Reserve, the presidential rates, interest rates, the price of oil. And I go through my dashboard several times a day just to make sure I know where I am, just to make sure that I have an anchor and a bit of a touchstone to catch my bearings. The S&P 500's at 2075 this morning. The Dow Jones Industrial Average 17,837. The 10-year Treasury 1.75%, pretty low. Oil $44.18 a barrel, up off of that $26 low. Actually, we somehow called the bottom in oil about a month ago. Oil, that's oil. Gold, $1,276 an ounce. That's been staying pretty steady in that $1,100 to $1,200, $1,300 range. And the euro is $1.14. So the value of the dollar has actually fallen a bit. Those are my touchstones. Tells me where we are. Where were we on 12/31? Well, just very quickly, the Dow was 17,425 on December 31st. It's now 17,837. So not a lot has changed, though we've seen a lot of volatility. And people now are telling me they're more fearful. I'm getting a lot of questions about what investors should do given the upcoming election that appears will result in either a President Clinton or a President Trump. They suggest that there are going to be big changes from President Clinton or President Trump on things like trade, things like taxes, on entitlements, on spending, on defense. And indeed, both candidates are saying that they want to make changes in all of those areas, plus some more. Some folks are upset and they think they ought to sell everything if one or the other looks like they're going to get into office. I don't do politics, I do investing and I do markets. So I look back in this week's market commentary, which I've written. It'll go out today. I commend it to you for some of the data we've included. But basically, there have been any number of times over history where clients have come and said, you know, Mr. Farr, this is what I see, and therefore the price of oil has to go up. And therefore stocks have to go down. And therefore you have to buy Apple or Google or Microsoft or Amazon or Pfizer or Johnson & Johnson or Bank of America or PNC or JP Morgan. You have to do these things because clearly, Mr. Farr, you know that this is going to happen. The one thing that sitting in this chair for almost 30 years has taught me is I really don't know. I rarely ever know, if ever. The process of investing is humbling. My friend Peter Keefe says there are only two types of investors, those who have been humbled and those who are about to be. For all of the various difficult, tumultuous times in my investing career, and certainly over the past 10 years or 20 years, there have been some pretty upsetting moments. And yet, markets over that long period have gone higher. So my advice to my listeners and viewers, and especially to our firm's clients, pay attention to your touchstones. Stay anchored. Make sure that you look both at the data and at your long-term goals. Try and ignore the short-term noise. In the fish market, they say ignore the yelling and the screaming and pay attention to the price of fish. We'll get through this. We're doing our fundamental research. That's what's really important, making sure we own the right stuff to get us through the next several years. The economy, I believe, will continue to work itself out and grow over time, and the United States over time will continue to prosper. Shareholders of these large American companies will benefit and endure as the economy and corporate America continue to grow. So, stick with your touchstones. Ignore a lot of the current noise. If you need a little help, give us a call at Farr Miller in Washington. Thanks a lot for tuning in. In Washington, D.C., I'm Michael Farr.